So today's price action of EU. First look at yesterday's candle. It took buy side, it took sell side, but closed strongly below this volume imbalance. So therefore made me bearish today. Then on the 1 hour, what I have marked out was this new dealing range that was formed yesterday. If you zoom out a bit more, we can clearly see sell side taken, buy side was taken. We have a nice displacement lower, so therefore marking out this dealing range. I marked out this inversion fair value gap, which also overlaps with this order block. So this makes this an extra strong level with two overlapping PD arrays. Furthermore, yesterday price was respecting very nicely the 50% mark of this dealing range high from this to this low. Also, what I noticed was that the midnight opening price was acting as resistance. Price broke strongly above it, and then it acted as support. The real support and resistance level. Also, what I notice here is those are propulsion blocks, down close candles trading into other down close candles and sending price higher. But also notice that the price is not trading or closing above the mean threshold of this inverse fair value gap. Yes, there are a lot of wicks, but price was also always closing below the mean threshold of this inversion fair value gap. So let's see on the 5 minute then. I marked out these relatively equal lows. So price ranged, traded higher, respected, came back. Then price came back again, traded equal highs, and then what happened? You have these equal highs resting right here inside this 1 hour. This is the 1 hour inversion fair value gap, like so. So these highs were taken, price then displaces lower, so it took out fair value gap and it is creating bearish fair value gaps, taking out bearish candles that should support price higher. So that's where I took my trade. I went short. I guess it was something on this candle. Maybe I did an eye of ED. There my target was, I think, something already. I made it. I wanted to something like this. So I traded back. Retested these highs or turned into this bearish fair value gap. Then this space is lower again, taking out these equal lows. But then price was respecting this level, and this is the 25% mark of the 1 hour dealing range that I just marked, that I had marked out. So price just took liquidity, respected that level, and then price traded up again. But it didn't wick me out. Instead, it took out this buy side liquidity, then closed back in the range. So I was thinking, now I'm still good. Now price will displace lower because it took once more. It took liquidity. It was closing again in the lower half of this inversion fair value gap. So I was expecting lower prices from here, but I was wrong. Instead, it was respecting this order block, as you can see right here. It's closing in the upper half, touching it, the mean threshold, and then boom, after that it took me out. And these are little mohawks, and higher time frames, of course, those are wicks, because we're now on the 5 minute. Even more higher. And a 1 hour, you can see it's just a wick trading, not into this fair value gap, probably some other PDRA, but anyways, price was obviously closing way below this inversion fair value gap again. So again, this is now a new dealing range on the 5-minute. I was anticipating again lower prices, but yeah, it was Friday, no news, so therefore price was kind of consolidating and doing nothing special. And also, if you look at the whole week, Monday created the high of the week, and then there was a large range of consolidation. We took out both sides of the market already, and now price is just dying off a bit. So not the easiest week, but yeah. And also, what was not in my favor here was, again, if we zoom out a bit more, I was shorting below the 50%. So if this would be in a premium, that would have increased my chances a bit more. But yeah, it is what it is, and I think yeah, it was not the easiest day to trade. Thanks.